Good afternoon and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick France.
And we're here for you today, letting you know what's going on in the market, what's hot and heavy and rocking and rolling and all that stuff. So glad to have you here, glad to be here, glad to just be alive. How about that, Patrick? Just glad to be alive.
Yeah, definitely.
Okay. All right, if you're brand new to the channel, don't forget to hit the subscribe button, hit the bell icon so you'll be alerted to when new videos like this comes out. And most of all, if you like the content, don't forget to hit the like button. If you can hear us, by all means, please respond in the affirmative, preferably with VV Nation. Let us know that we are coming across loud and clear, and let us know where you're tuning in from so that we can shout you out. Shout it out. We want to be able to shout out where you all are coming in from. Mark is here. Cigar is here. Lou is here. Roger's here from steamy Arizona. Yeah, my kid just moved to Arizona, working for Taiwan Semi. It's a stock that we're going to talk about today. Actually, it's one of Patrick's picks today. But it's a big facility. He's not at that facility yet. He's still training in Colorado, and then after that, he's going to Taiwan for a few months to get a feel of what it's like. From the core perspective. Jay is on Facebook. Hey, Jay. Arnold, wait a minute. Is this my Arnold Rosenthal that I know from a lot of years ago? Is that you?
Arnie?
On the West Coast? Is that my Arnold from the West Coast? Is it really? It would be great if it is. I haven't talked to you in what seems like a lot of years, if that is you. Ruben says low volume. If there's a volume issue, let Patrick know. Let Joey know. He'll work on that for you. Kobe is here from Israel. Always love that we have people stretching from around the world. And it is my Arnold from the West Coast. Man, it is great to see you on social media, my friend, supporting our social media channel. Man, that is awesome. You need to email me. We need to hook up. We definitely need to hook up. I haven't talked to you in quite some time.
Glenn, I don't think that this is the appropriate spot for that here.
Shut up. Because I do it the flying flip I want to do when it comes to somebody who I haven't talked about in a long time. So you hush your little young mouth over there, youngin. All right, so.
I like Patrick Glenn from last week a lot better.
Because I wasn't here. Do you think we're going to have a recession? Yes, I think we're going to have a recession. And that was Sanjay King. Do you think we're going to have a recession? I think we will. The only question is it going to be a mild recession? Is it going to be a deep recession? I think we've gone past the corridor of having a soft landing. I don't think that it's about a soft landing anymore. I look forward to communicating with you, Glenn. I got you. All right, so Tanguy, that's what it is from Belgium. Gotta love that as well. So by TLT may not be a bad play. TLT may not be a bad play. So let's get into it. Let's get right into it. And we've got some web stories that we're going to bring up. Joey's going to bring it up for me. Where's the mouse? There we go. Start off with some.
Don't yell at your caretaker.
I got nothing to do with me. That's all Joey. By the way, say hi, Joey.
Hi, Joey.
All right, he's our producer. Cup of tea, Governor. Hello from Mark. Is that coming in from all the way over in London, I'm assuming? I hope so. All right. So another thing. If you haven't already, share this live link with people in your social circles so they can be caught up to date on what's going on in today's market action as well. So take a second, copy the link for the live presentation and post it on your social circles, please.
You know, you can just click that share button as well.
Listen, you do what you want.
That makes it a little bit easier.
You do what I just told you to do. That's what you do. All right. Nice haircut, Patrick.
Thank you.
All right. I'm gonna get my haircut. We got a summit coming up on Friday. Joey says I had to get my haircut, so I'll get my haircut. All right. So with that, first story, Fed Evans. We will need to raise rates a good deal more. Now, Patrick and I both have a little bit different opinions in regards to raising the interest rates. And I think they both have credence in regards to what's what. Patrick feels that the raising of the interest rates doesn't help the inflation, but the only tool in my case, I think the only tool that the Fed has to bring down inflation, and it has always the only tool that they really had to bring down inflation, is to raise interest rates. But there's another factor here, and that's the supply issues with oil, and with oil raising and going higher, which is one of the main cores or things that make inflation go higher, is not being addressed. So it's the Fed's main only tool, and I am a big fan of, we are the ones that can affect inflation as well. If gas prices keep going higher, if food prices keep going higher, if everything is going higher, we as people, as citizens, can choose not to buy those things. When you do that, then the demand decreases, and then eventually prices will decrease. So there's another way, but it's us. And somebody said, yeah, we're gonna tell everybody, yeah, don't go buy stuff and blame it on Glenn. And then I'm gonna get a call from the government saying, yeah, what's up with that? What you doing? And I'll be like, it wasn't me, it was Patrick. And I'm just gonna just totally throw Patrick under the bus. Totally, just straight up. Him and Joey. I'm gonna.
So you're forgetting one other option, though.
What's that?
Instead of, because basically, if you watch the Senate Banking Committee this morning,
talk about that. Go ahead.
With Powell talking about it, or Powell on there testifying, he specifically stated that the Fed, with their interest rate, being able to control interest rates, their main ability is focusing on the demand side and being able to slow down demand by increasing rates. I get that aspect of it. Okay. But a lot of people and a lot of the Congress or senators that were in the testimony, called him out, and he had to admit it that, raising rates doesn't affect the price of oil right now. It has no impact on that. Raising rates is not going to address the cost of food, so there's no impact on that. And that, he's playing, and he basically had to admit today that he was playing a risky game that could very easily go into a recession or cause us to go into a recession. And if that happens, then all of a sudden people are laid off. That's going to exacerbate the recession, and there's going to be an even worse outcome, by raising these rates. But, some of the senators did bring up a good point that, the other way of balancing that supply demand act that, they're working on one side of it. The other aspect of being able to balance it is by increasing the supply to meet up with the current demand. Now, supply has been low because of the lockdowns going on in China. So the supply chains have been, struggling here. And his main point was, if he can lower demand enough, through interest rate hikes to let supply catch back up, then that would be their goal. But at the same time, if they can start producing more here, which is a lot of the stories that we have to talk about here today, but, bringing supply chains here to the U.S. and producing here in the States helps reduce that kink in the supply chain and allows them to be able to build inventory and get their the supply side back up, which would also increase jobs, increase the productivity in the market. And also, basically have that same effect of trying to, match that supply demand, so you slow down inflation. Because
there's an interesting part to that. Build up supply here. Well, the problem is that we've got our supplies coming from outside of the United States for so long. You know how long it will take for us to build and bring supply back to the United States?
Less than you probably think it would.
I don't think so.
We already have the infrastructure. Now, it may be outdated and they may need to update it, but
Absolutely.
Renovating infrastructure is a lot faster than building from ground up.
Well, I think that if you talk about saying, let's bring chips back to the United States, let's bring a lot of the things that we outsource. Now, there's a lot of things that we outsource especially from natural stuff that we don't have. There's a lot of stuff that we don't have in the ground that other countries do have, with the exception of oil. We do have the oil. We can drastically help ourselves on the supply side for oil if we drill more, if we frack, if all of that And that really is another conversation for another time. But I think the whole idea of bringing the supply back to the United States is going to definitely take time outside of oil. I think
Yeah, and
outside of
I
oil.
mean, I would agree. It's a medium to long term solution, but also, it'll have that long term benefit as well because you won't potentially be dependent or so dependent on other countries anymore. So if something like this ever does happen again, we'll be able to we'll be in a lot better situation rather than being held ransom.
Well, I got a comment here from Jeff V. Listen to the farmers who say much of the increasing costs in farming livestock hasn't yet been factored in when their current contracts renewed. The feed, seed, fuel, etc. They will raise their prices. So, there's a lot of other things that's still part of the ripple effect that we haven't seen yet. And if the farmers are going to have to raise money for their things, that means food prices go up. And the problem is with that, we can't be without the food. So it's not like we're going to say, well, we're just not going to buy food. That's going to screw us. That's going to definitely screw us. So there's still longer term effects that we haven't gotten to yet that haven't been affected. Another thing is, with the raising of the interest rates, companies are going to start missing earnings Q3, Q4, going into Q1 of next year. All of that is going to add to a recession. And I think that it's not if we get a recession, it's going to be when we get a recession. But the big question is how deep the recession is it going to be? Is it going to be a mild short-term recession, or is it going to be a recession that's going to hold for the next couple of years? Now, I also got to keep in mind one other thing. We got midterms. And it's tough to not put politics into this because one party is going to be all about, well, look at what we've done. And the other party is going to be like, well, you guys are stupid. And you put all of that back and forth. I think some things are going to be made to look rosy during the midterms to help to detract away from how jacked up our economy is at this particular point in time.
I mean, it's already starting. You're already seeing the narrative trying to be pushed.
Yeah.
I mean, look at Yellen, who said the recession is completely, avoidable, or it's not inevitable, after they already said it's,
it is inevitable.
Inflation is transitory.
Yeah.
It's that they're trying to say, it doesn't have to be like that. We don't have to do that. Then one of the top economic advisors under the last two Democratic presidents even came out and said that, the course that we're taking, that the Fed is taking right now, is on track to putting us into a recession. So
I got a couple of other comments talking about bringing supply back to us. Chris says, takes 3 to 5 years to build a semiconductor plant. This is a very specialized and intense manufacturing process. John says, bringing supply manufacturing to the U.S. will take a long time. Infrastructure requires the workforce to power it, and the workforce with the skills needed is lacking stateside. I would love to say that it's easy for us to bring the supply that outside of oil supply back to the United States, man. But I don't think that it's a short-term thing. It's going to take some time. It's definitely going to take some time. And the infrastructure may be there, but where's the skill set? We can hire where's the skill set to be able to do these things? And that's where I stand.
But that's the thing is, I mean, the construction aspect of it, yeah. You may need to get some people up to speed with building and construction, but production aspects of things are mostly done through robotics nowadays. So the production aspect of that is going to be quicker than a lot of people anticipate. But renovating and updating the infrastructure to make sure that it's ready to be able to support that, manufacturing back here in the States, that will take some time. So yeah, I completely agree. And like I said, it'll definitely be a medium to longer term solution, but it has the possibility to really put us in a lot better standing than what we're currently in.
And Susie's on your side, says we have to start somewhere. I'm with you on that. You got to start somewhere. And I keep seeing a couple of comments that the primary wave is up. All right, let it be up. Let me. We're going to talk about that. All right, we're going to talk about that. Another story. Powell says the Fed strongly committed to inflation fight, but not trying to trigger a recession. Okay, then. That's all I got to say about that.
Yeah, he said that a lot today in his committee meeting is that, when they asked how, or a few different senators asked them his confidence level and not, or having a soft landing or being able to orchestrate a soft landing, he never gave like any certain exact answer or specific, percentage wise, but always said, if it does happen, it is not our intention. And that's not what we're trying to do. But I mean, that's pretty much a cop out the whole entire time, that he knows that the risk is extremely high with the game that he's playing to potentially put the economy in a recession.
Agree. All right. U.S. stocks rise after Powell remarks. Yields slip. Again, the primary wave went up. And you know something? I don't know if this is what he said is good enough news to keep the market moving higher, but the primary wave is up. We'll keep our eyes on that.
It'll be good enough to get us to a next inflation data reading.
Well, when is that? Inflation
this Friday or next Friday.
And then next Wednesday is GDP.
That's what I was meaning, the GDP data.
GDP is next Wednesday, bro.
But he did hint that he expects to have a positive GDP this quarter. He did hint at that during his interview.
I know I'm not listening to him because it's transitory. So if that happens, then that takes the textbook recession out of play. A lot of people in the room already feel that we are in a recession already. I tend to agree with that. I'm just waiting for the textbook definition of it. Part of that definition is going to be this: jobs pulling back. More companies start to rescind job offers. Well, so part of having a recession is the job market gets all jacked up. It's still not all jacked up. Yeah, a lot of companies out there looking for people. The problem is looking for the skilled labor to fill the skilled jobs nonetheless. But this is an interesting story. The labor market remains hot, and that's going against what a recession would be. Yet businesses in range of industries are pulling back job offers to recruits they were courting just a short time ago. So that's interesting to add to the characteristics of us being in a recession.
I mean, I called it one of our very first AMAs that we did. That, the job numbers look good right now, but wait over the next 6 months or so as these severance packages start to drop off. And you're going to start seeing a lot more news coming out about, jobs being taken away, layoffs, everything. And I mean, I even have an article to bring to the table here with this. It pretty much confirms this. JP Morgan today announced they're laying off 10%, if I recall correctly. It says in the article, but
you should have access. Oh, no, you don't. Here it is.
It says they're laying off. But one of the things that positive from this, is a lot of these bigger companies right now, instead of just instantly going to layoffs and letting everybody go, that could really slow things down a lot quicker than what the Fed's expecting right now, is that they're trying to move, half of them to a different division within the bank. So their total 1,000 workers at JP Morgan are being affected, and half of those, so 500, are being redeployed to different divisions in the bank, with the other half of them, another 500 being terminated. Granted, 500 people, when you consider the size of JP Morgan, obviously isn't that big, but we're seeing more and more stories coming out. Tesla laying off 10%, now all of a sudden getting sued because they didn't put in, they didn't give them enough time, apparently. There's all these companies out there that are laying people off left, right, and center. Smaller percentages currently, but as we know, that's a snowball effect.
So, and this makes sense as the interest rates start to rise. A couple of things are going to happen with companies. One, they're going to start missing earnings. And two, if they start missing earnings to cost cut, they are going to start laying off people. So put those two things together. It is what it is. All right.
Yeah. But we called it.
What is a recession? I got a video out about a recession, stagflation, inflation, all that stuff. As the stock market declines and the Fed hikes rates, recession fears are rising. here's what to know. And again, there is a video that's out that talks about all of those things that helps us to see where we are right now. Before I go into all of these other stories, let's do this. Let's go to the market. Let's go look at the market timing graph. Here's the move today. Interesting at the first tick, and I am looking at intraday 5-minute bars. The first tick was very promising, even though we gapped down. Look at the big wick at the bottom of the candle. A lot of buying pressure on the first 5-minute candle, and the market moved up ever since. Still hitting new session highs for the day. A little bit of a wicket.
That initial run was due to Powell.
Okay. What time did he go on?
9:30. I mean, it was right around when the market started. So
all right. So that's probably attributed to a lot of the things that he said. Then after that, markets pulled back a little bit. Now we're running again, hitting, like I said, new session highs. A little bit of a shooting star on this 5-minute candle with some follow through. I'm looking at 3-day exponential moving averages, fast moving averages. I like that the market found a level, a sense of a floor, a sense of support, 3-8 cross, and it's been positive ever since, moving higher and moving higher and moving higher. Let's go to our home page. There's the green light in the color guard pricing column. Now with that, for all of you who are subscribers to the VectorVest software, what is the color guard telling you? There's a lot of yellow. What does yellow mean? As a yellow light, what do? Slow down. Am I ready to back up a truck and buy stocks while the primary wave is up and a green light in the color guard pricing column when I've got a lot of yellow? Not only that, with today's activity, I've got all 3 lights. Really, Mark? I've got all 3 lights being represented in the color guard. The market's having a hard time really making up its mind. I think it's something else that people are missing. I'm going to add something. What's the VIX doing? What's the volatility? Where's the
something that people are missing? The bell has not rung yet today.
That's right. Anything, and with the high VIX sitting at 29, with a high VIX, anything can happen before the end of the day. Glenn, 2 days of testimony before congressional committee, long days. I got you, Ms. McClintock. But the VIX is falling down a little bit. Maybe people are not as fearful. Bull pucky. It's still at 29. There's a lot of volatility, and I'm right with Patrick. The bell hasn't rung today. Anything can happen before the end of the day today. Anything can happen before the end of the day today. So it's great to see that the market's moving higher. There's that shooting star pattern on the 5-minute bar. Well, with follow through, could be a possible reversal. And the VIX is still where it is. Anything can happen. I'm right with you, bro. All right, green light just went back to yellow. Bada boom, bada bing, baby. That's what volatility is all about. It will smack the ever-loving cow-walking pee out of you because that's what it's all about. That's what it's all about. I don't know where all of that just came from. I had no coffee today. None. But I went to McAllister's and I got me a tea. Woo-wee. All right. So
this just got awkward.
Well, as you drink your Red Bull, right? As you drink your Red Bull, it just got awkward. Okay.
And I'm being the one that's more level-headed.
Wow, listen, it is what it is. Chris says hi on Facebook. Hey, Chris. Cow walking pee. Yeah, that's, I don't know. It just came out that way. Just came out that way. All right, let's get back to the story. So I wanted to see what was going on. This was going on in the market right now. So another story. This is a Patrick story. China war risk sees Taiwan's TSMC moving fabs to U.S. and Japan. Talk about it, Patrick.
Yeah. So, I mean, it's just, well, it has to do with what's going on in China, this posturing that China's doing with Taiwan right now, making
you have
verbal
control, by the way.
All right. Making verbal demands, of what they expect to see to try to keep things the way they are right now. So already, and you mentioned this a little bit ago, already TSM, which is one of the stocks we're going to look at here today, has been making plans and already getting the funding for a plant in Europe, I believe, if I'm not mistaken. Let me go ahead and maximize that, but also plans for the US as well. And so they're trying to diversify their supply chain And, COVID and all that definitely made this, apparent that they needed to be doing this to begin with. And now with the posturing from China, that's kind of accelerated the pace that they're already going at. Um, so I mean, if we can have this happen, the thing is though, if they go too quickly, that could spook China. Then all of a sudden you have a lot other issues going on. But if they can keep this under the radar and keep the transition going to diversify where their plants are at, this could be a huge benefit to the U.S., huge benefit to countries all across the world. Help diversify your supply chain and bring some of these plants here, because right now Taiwan's pretty much the only country that produces these semiconductors to the levels that they supply the world or the global economy with. Um, and so if you have everything centralized in one spot, it's really easy to cut that line off, and then all of a sudden you're left without being able to build cars, without being able to do anything or create anything that has an on and off switch. So yeah, it just goes to show it. You were out last week. Well, we had a better version of you last week. And,
Ha!
one of the things that we talked about was Lego, another major company, another big name, is bringing production here to the United States. They're building a plant here in the US as well. So, we're seeing more and more of these bigger name companies bringing production back to the US. And this is, part of what we talked about earlier. If you have this production going on, you have these companies planning on building plants here, that could create an economic boom, because you're going to either renovate the old infrastructure that needs to be updated, or you're going to put new infrastructure in, and either one is going to create a lot of jobs to get that built, and then the jobs going into running these plants and keeping them maintained. So seeing infrastructure, seeing manufacturing coming back to the US, even though it's small right now, it's becoming a larger trend. But that has a lot of positive implications for the US. So, yeah, this is definitely a move in the right direction, but they do have to be careful that they don't, move too quickly.
Gotcha. Tom says, I think they're planning a plant in Phoenix. Yes, my kid took the job with ASML, which is linked up with Taiwan Semi, and he now lives in Arizona. Um, it's from what I understand, it's a massive complex that's still being built for ASML, and Taiwan Semi has got good close ties with them back. So he's working for ASML, but doing a lot of work with Taiwan Semi. They got a collaboration going on. There's a ton of engine manufacturing in China and Taiwan that GE, PWA, and Rolls Royce should be concerned about. I'm not sure from that perspective, because the companies that are here, that are building, that are from a manufacturing perspective, they're already here. But you know something, that's competition. If you're building more, you can build competition. That brings prices down. If you can do that. And Robert says, are they just figuring this out? No, I think that we've been in a situation where we've been complacent. And I think that's the key word there. We've been complacent of where we have been, and okay with, having manufacturing outside of the United States. And now it's coming to bite us in the butt. All right.
Well, and a lot of it has to do, I mean, I understand the economics behind it, but a lot of it has to do with economies of scale. I'm not, for trying to keep it simple out there, when you have everything centrally located in one spot, you can hyper focus on that one thing. Therefore, you can figure out how to minimize your costs, minimize everything to maximize your profits on that one specific thing. So if you have all these different areas around the globe where, Taiwan makes semis, you have, one country making grain, one country supplying oil. If you have it all centrally located in one spot, they can, maximize their return on that. And that makes it cheaper. So therefore, that's the whole concept of the global economy. Well, then COVID hit and showed all the cracks in that whole philosophy of, trying to centralize everything in one specific area. and showed the benefits of, having things diversified as well. So
Another
it's a
reason.
different mindset, from what we've been doing over since really 1990s till now. So we're seeing a change in economic mindset that I think could greatly benefit the US if we play our cards right.
Another reason why a lot of manufacturing went outside of the U.S. is because of what Lou said, the production run away from U.S. because of restrictions and taxes. There was a time where we wanted to tax everybody who made a lot of crap, and a lot of companies left. A lot of companies left and went outside
But
the
they're still
United
considered
States.
US companies, unfortunately.
But then a lot of people moved their stuff from building it here to going outside of the country to get it built as well. So a lot of the production that we could have done here was stymied because of the taxes that were being levied on these companies. And they went outside of the United States to get it, and they could get it cheaper.
But that has also changed within the last couple of years as well. And you see, Yellen talking about it a lot, and especially during a lot of our meetings. The global economy, to try to entice companies to come build and do manufacturing in their countries to try to spark growth. They've been, basically on a race to zero. And I think, with Yellen trying to get the big countries out there to be on board with it, we're going to see a pushback, because all that's why we don't have any infrastructure. That's why we don't have any money to grow infrastructure. That's why wherever you drive in the country, roads are breaking. There's big potholes everywhere. Everything looks like it's breaking down.
Not
and
in
that's
Mooresville.
because,
Mooresville, our roads are beautiful.
eh. But I mean, you're seeing, though, major economies around the world now coming together now and working together to try to slowly increase that tax avoidance that major corporations have been going for, to try to bring that back, and so therefore level the playing field a little bit. And that's, since that started, you're now starting to see more and more companies announcing their plans to come back to the U.S. to start manufacturing again.
Are we because there's stuff out there in Congress that says that we still want to tax the big companies, that we still want to tax the richer people. So I don't know. Is that really happening, or is that just a facade?
Political speak is different than actions.
Okay, I hear you. I'm just saying. I'm just saying. Mark says
They
wages.
can say all they want. All that does is just basically makes the average American pay more, and they still keep their tax breaks through legal loopholes. So
Mark says wages are going to be prohibitive bringing back production to the U.S., especially with the current labor issue.
But wages have flattened out recently as well.
But if I can go and get the product that I make and I can outsource it to Taiwan, if I still want to make it here, I got to raise wages, which now makes it cost prohibitive for me to make that product here. And again, I think that even with people saying that they want to come back and bring the business here, wages are going to be a problem when it comes down to production.
So, one, wages have started flattening out.
Okay.
Two, you also have to account for the cost of transportation and shipping. And if we have any of these, if China continues to go through rolling lockdowns, and you don't have any bonus, or you don't have any, relief on that, then you're still going to be paying more just to have that product, because there's such an issue with supply. That, it's now made the US more attractive, because if you can produce it here, you're not going to have to worry about closing your manufacturing down for the next 3 months, or worry every single night of, hey, am I going to wake up tomorrow and have my plant closed down? And then also being able to distribute it a lot quicker and cheaper than paying, thousands of dollars for a container right now. It's made US more competitive in that sense. So even though there are higher labor costs, it's offset from the other risks that they potentially run across, keeping it all in one area.
I don't know. I still think that the price of us making a product still makes it more expensive than outsourcing it. And I think that's the path that we've gone down for the longest time, is the outsource, because something, it cost us, I'm hearing the stories about you need to refine more oil. You know how much it costs us to take oil out of the ground than to go get it from somebody else? It costs us a lot of money to pull the oil out the ground.
U.S. oil.
Say again?
The refineries in the U.S. aren't set up to be able to refine oil from the U.S. They can't do it. They're designed to filter or to refine oil from, India, I believe, and a few others. But yeah, even if we had our own oil, the refineries that we have in the States can't refine that oil to make it into products.
No. So then why do we talk about opening up the XL pipeline if we're going to pump the oil? Where are we going to refine it?
We have to send it to another country to do it and then bring it back here.
I don't think that's right.
Look it up.
Okay, and I need to, because if everybody was saying that we were oil independent because we could pump out that. But you're saying that we sent all of the oil that we pumped someplace else to refine it to bring it back to us?
Yeah, because the refineries, ever since 2016, when we had the fracking crash, refineries have been transformed to be able to handle certain types of oil, and U.S. oil is not one of them because we haven't really produced it. The infrastructure is not designed for that right now currently.
Well, I know that they were talking about the refineries are being converted over to green energy type stuff. Hold on. Dan says the Keystone Pipeline was supposed to create 11,000 jobs, but Biden revoked the permit, blah, blah, blah. Now the company in charge is suing the U.S. Okay, I got you. And a lot of people keep saying, oh, we just should have kept the Keystone Pipeline. You guys don't realize that the Keystone Pipeline still is not built? And a lot of people say, oh, yeah, we just need the Keystone Pipeline. It's going to pump the oil. It ain't pumping up nothing. It ain't pumping nothing. Now, the whole idea was to keep it going so that we could build it. All right. And then they stopped building it. It's still going to take years before that Keystone Pipeline is active to be able to pump the oil. All right. So it killed a lot of jobs. Yes, I understand that. Blah, 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 blah. But everybody says, no, we need the Keystone Pipeline right now. We're going to be able to produce all this oil. No, you're not. It's got to be built. It's still got to be built. So I need to look into that about the refinery, because ExxonMobil sent a letter to the president saying, you're not making oil, the drilling for oil appealing for us to do. And that's your issue. And then the president said, no, there's a whole bunch of oil dealies out there for you to go and pump the oil in these. So it's going back and forth. But if that's the case and everybody's saying that we can be oil independent, which I think we can as well, and then you're saying that we can pull it out of the ground, but we still have to send it to another country to refine it, I need to look into that. And Paul says, Patrick is right. Our refineries are mostly set up for Canadian tar sands oil. So if we pump the oil out of Alaska, you're saying that we got to send it to another country in order to go get it refined?
From my understanding, yeah.
All right, I need to go take a look at that. Tom says, I thought the Keystone was to bring heavy oil from Alberta to refine in Texas. Is that how that worked, Tom? All right, I know that Texas plays a big role in all of this too. So we're going to pump the oil through the line. There's already a line going from Canada to Texas. The XL was to increase the amount of oil that was coming out of the ground to be able to be used, but still being refined. So it's being refined but that's Canadian oil to be refined in Texas. All right. It's a lot. So here's another story about yours. Going from the oil perspective, go talk about this. And go ahead. As you get ready to start the story, I'm going to say something. Go ahead.
Oh, hold on. You move on to something else real quick. I'm looking something up.
All right. So this story is another Patrick story. Big oil bets that green hydrogen. And every time I hear the word hydrogen, the next word behind it I want to think about is bomb, is the future of energy. So, and I think that hydrogen has its place but I think that more people want to know that it's friendly, that it is hydrogen, that it is friendly, and that it can be used without going boom. So, as
And
Patrick is,
so
go
one
ahead.
thing that's interesting with this though, we're starting to see, I was thinking about it when I was going through this, we're starting to see a divide between the auto industry and the energy industry. So basically the auto industry, is the one saying, "Oh yeah, we're going all electric by 2030." Well, the oil industry has already started making plans of changing that and not going off of, producing batteries, but running off of hydrogen because it can be, it keeps their foot in the door essentially. It keeps them relevant without them turning into relics and then going to the wayside.
So, hydrogen has been talked about for a few years, even before the EV craze took on.
Exactly, but it's
Okay.
never been successful because I know when I was in college, and that was 12 years ago now at this point, when I was doing an internship at the airport, we did a grant. I helped with a grant to get a hydrogen fuel station for one of the trucks that we were going to have on the property, and we were going to be testing it. And that was 12, 13 years ago now at this point. So we've been working on hydrogen fuel and hydrogen as a fuel source for quite a long time, but it looks like the major suppliers in the oil industry, the big four, have started investing or starting to invest a lot of money building these projects, mainly in Australia, but a few other countries as well, U.S. being one of them, and Europe. But they have their idea of what the future looks like in terms of clean energy and in terms of um, you know providing a source of energy for a vehicle. And then the auto industry seems to have another sense of what they're going to be doing. And so we're seeing a divide in the path. And it's going to be interesting to see which one comes out ahead or which one,
Okay.
really starts to dominate. Now, it does go in this article, talks about um, the fact that the hydrogen aspect hasn't been quite as time tested, and there's still some questions left to be figured out and how it's going to work.
I think
But
the biggest thing is that it's not been nearly as accepted as the electric vehicle.
but the
Okay.
thing is, if you have hydrogen, one, you can charge a lot faster, you can fill up a lot faster. Two, because it's being developed from the majors, you have a lot of expertise in how to transport it, how to ship it, how to get it around where you need to go. Uh, and they have, the expertise on how to develop the infrastructure to be able to make it a lot easier to go by rather than trying to charge a car in, you know, 5 to 6 hours, and then also having the battery, slowly dying away over time. Um, so it's interesting, two major sectors in the U.S. economy, or really in the global economy, are starting to divide past and trying to, I think we're going to see a battle between the two of them and figure out which one comes out ahead is really anybody's guess. But definitely going to be an interesting story to see how they develop over the next 10 years or so.
Okay. I got you.
And also, I'm gonna try to, or that's what we're gonna be talking about tomorrow for our Trending Thursday. I'm gonna build a list together of hydrogen
You mean the
related stocks.
mobile app?
Yep, in the mobile app. Did I say Trending
You
Thursday?
said trending Thursday. I'm about to say that's not what I'm talking about in trending Thursday.
Yeah, I'm talking about the good time, the 11 o'clock one.
You're right. You're talking about the good
Mobile
time, the
coaching.
2 o'clock, the 2 o'clock session.
The mobile
Absolutely.
coaching, the better time in the day. But yeah, I'm gonna be highlighting a watch list of stocks that, if you're interested in this, that to keep an eye on. So
Couple of things coming out of here. Javi says only certain refineries can process oil sands from Canada. Canadian select oil is very heavy. Heavy oils require more processing. There was another one here about There it is. Chris says there is more oil than enough. There's more than enough oil and refinery capacity in Canada and the U.S. to support both countries. There is a lot more at play that we are being told. I don't disagree about that. I think that there's a lot of stuff behind the scenes that we are not talking about. Biden said revoking the permit that approving the proposed Keystone XL pipeline would not serve U.S. natural interests and would undermine the U.S. climate. The agenda of the current administration is to push towards clean energy. Now, I'm all about, whether it's hydrogen, whether it's electric, whether it's what, I'm all about the clean zero emissions.
So
I think
one
that the
thing as well to
markets
add on
need,
it,
hold on,
I was thinking about it.
hold on a second. I think that the markets need to dictate that, not any governmental body needs to dictate that. And a lot of things that are coming out of Congress is, well, gas is high, then go buy an electric vehicle. I've done a lot of stories on electric vehicles, and one of the biggest points against buying electric vehicles is the price. I don't disagree with that, and I think that Tesla, the big name, is doing a good job in at least trying to come out with lesser expensive cars. And I think that as the demand continues to increase, the supply should match up with going after the lower dollar cars. All right, so that's what I'm going to say about that. Go ahead, say what you was going to say.
So one of them, I have to go through the article, but one of the majors in the oil industry, I think it was Chevron. It's either Chevron or Exxon, I believe. But one of the creative solutions that they're working on is instead of taking hydrogen or taking water and trying to extrapolate the hydrogen from it, they're taking, I think it was methane or some type of gas, and then they basically split it so that way they get hydrogen, and then they get what was the other aspect of it? Goes into ammonia. So for fertilizers, all of that. So therefore, you can not only get the hydrogen for the energy consumption aspect, but then you can also get a byproduct of ammonia, which will help U.S. farmers, since we were talking about that earlier. Things that are a product that's harder to get in the U.S. that's easy to find elsewhere. We can now start developing it potentially here, and once again bring more job creation and more industry back to the U.S. So it's real interesting to see how these companies are developing it and what their plans are for their future here.
I think it's going to be interesting as we continue to go down this road of clean energy, how this will all play out. But I think that, again, you know how I feel, all the stories I've done on EVs. I think that it's going to be the wave of the future. I think that these companies offer investors an opportunity to make a lot of money. I still think that the market needed to dictate it, number one. And number two, I think that it is jacked up for anybody who's pushing an agenda. I don't want to get political, but pushing an agenda and say, well, you don't like the gas prices, go freaking buy an electric car, when the majority of these cars are outside the range of the typical consumer to buy. I still think that the principle behind it and the companies that are building these cars have the potential to make a lot of money. Thus, investing in these companies have the potential to make you a lot of money. But I heard that said on more than one occasion, and it pissed me off to just say, go buy an electric car. That ain't cool. That's not cool. All right. So whether that's a rant that I just gave or not, there's a way to go about it. If you've got an agenda that says we want to go after cleaner energy, that's one thing. But to force people to go in that direction is poppycock.
Yeah, but the government's shown that they are more than happy to try to force people into certain directions rather than letting the industry have its natural natural
course of doing business.
Yeah.
The market's going to do what
They
the
did that
market's
to
going to
West
do.
Virginia and completely collapsed the economy in the state, and because they banned coal production, but then they shut it off instantly and never had any plans on how to replace it or how to keep the economy grow or keep the economy alive there. And now the whole state is completely run down, filled with a lot. It's a lot different than it was 15, 20 years ago.
All right.
Let's put it that way.
All right. So we're going to leave that situation alone, because if not, I'm going to freaking blow a gasket. All right. I'm going to go through these. We spent a lot of time on our first stories. So I'm going to go through silver is essential in the production of both solar panels and EVs. Listen, I don't think gold and silver is ready to rock and roll yet. Not yet, but it will be at some time. We'll see. And I like it. Rodney says, this is America. We will find a solution. Yeah, I think we will. I mean, that's the optimistic side of me, that there is, we will work our way through all of this. All right. When it comes down to inflation, what else is getting affected? Home sales. KB Home to report earnings this Wednesday, which is today, amid softening housing market. KB is down today. KBH is up. KB is down today. I think that even in Mooresville, along my side of the town, there was a seniors residence that was going to be built, and all of a sudden they stopped. I think that the price of lumber is going to the moon. All right. And I think that that's going to affect a lot of projects that are already in play right now. KB, I'm seeing stories that new home sales are going down, that existing home sales are going down. And a lot of that is because of the inflation, but it's also because of the rise in interest rates. Here it is. U.S. existing home sales prices hit a record 407,000. Home sales declined 3.4% as mortgage interest rates climb. So talking about either KB homes or existing homes, KB building homes, existing homes, both of them are going to be under some pressure due to the rising inflation. The rising interest rates. And again, when that happens, one of the things Patrick has talked about, especially on his mobile, is that the banks should be the beneficiary, but they're not totally there yet. I expected them to hit higher than what they're doing right now than they are, but they haven't. But nonetheless, rising interest rates are affecting people's ability to buy homes. Remember, prior to this, everybody was buying houses sight unseen. All right. Right now, they need to see it. They see it. They got to see it again. And then they're going to see it again. And they're still not going to buy it because mortgage rates are going up. So that's a story on that. I'm going to bring up another story, Bitcoin. Everybody and their mama.
About this one.
Everybody and their mama talking about Bitcoin. I still think Bitcoin's going to play a major role in the metaverse. And I think at this particular point in time, the metaverse will come out when I'm about 90 years old. That's when I think it's going to happen.
So like, next year?
There's nothing to get. The metaverse is, shut up, Joey. I think the metaverse is going to be a big thing, and Bitcoin's going to, right now, Bitcoin is becoming, I don't want to say it's becoming a laughing stock. There's a lot of people that got money in Bitcoin. And I look at a lot of YouTubers out there that are still saying, hey, this is going to do this. And they get people to go to the page. But the thing is that Bitcoin is getting smacked like a something. I don't know. I don't have an analogy, but it's getting smacked like that. And people are still holding on to their Bitcoin. I'm one of them. I got a small little portfolio with some Bitcoin in it, and I open it up every so often and I go, damn, it's down. Okay. I open it up again in a couple of weeks and go, damn, it's down. Okay. I'm thinking that one day I'm going to wake up and I'm going to be a trillionaire because Bitcoin is going to go up 111,000% in one day, and I'm going to be a trillionaire. So I think that Bitcoin, I don't think it's done, and I don't think it's over, but I think it's setting up for a rebound at some point in time. It's just like in the regular stock market. Nothing can go down forever. And I don't think
I
Bitcoin
think we're close, but I agree. I don't think we're quite there yet.
not yet. And I think that it's going to explode. There's going to be no ifs, ands, or buts about it. It's going to explode because people are going to say enough is enough. They're going to be like my Popeye analogy. That's all I can stand. I can't stand no more. And Bitcoin's going to rise all over again. The problem is being able to time it. And so look at that. But it keeps going down. It keeps going down. It keeps going down. And people want to say it's going to go down some more and da-da-da-da-da. Just keep your powder dry if you're in it, if you're holding it. A lot of it is dirt cheap, sub-penny. And you just wait for the right time. Sounds like Bitcoin is your lottery ticket, Glenn. Damn right it is. It's sitting in the sideline to be there. That's my country talk right there. I just put on the sideline right there, put on my country hat and my cowboy boots and sit, and they're going to go up. Okay.
So I've been following this for quite a long time. And, I traded a little bit of crypto back in 2021. And then I realized that I don't know anything about the space and I needed to do a lot more research. And I've still been doing research and following through all this. And one of the things that's a glaring obvious fact from this crash is that there's a lot of toxic assets and a lot of over leveraging inside of the crypto sphere. I think cryptocurrencies in general are definitely being flushed out. We're finally seeing, some of the toxic waste from the bubble or the run that they've had, the last bull run that they've had, finally getting flushed out. But the blockchain technology aspect of things, that's where it's starting to get interesting. And I think, we're seeing a lot of the fake projects, the zombie projects finally getting thrown out. But at the same time,
there were a few of those.
Yeah, there's a lot of them. But, I'm looking forward to, once we finally start seeing things settle down, seeing who's left standing. And that's going to show who actually had, a project that can actually benefit the economy and benefit people. And then what projects were just, a whole bunch of smoke and mirrors.
I think that this pullback is going to weed out all the crap. And all, just like what Ethereum ain't going away. Solana's not. There's a Bitcoin ain't going.
Maybe going away.
No, who?
Solana?
I don't think so. I think they're viable. That's just my opinion.
They're struggling right now.
All right, but there's a lot of cryptocurrency, whether blockchain, whether miners, whether coin, that are out there that are viable. Those are going to be the ones that are going to be able to survive all of this severe pullback. And a lot of the little itty bitty crappy ones that we thought that were going to go to the moon are going to dissolve. And those are the ones that are, I'm
really surprised SHIB is still around.
And I'm thinking that both SHIB and Doge are still around. They still may be viable. Bro,
I think Dogecoin got the kiss of death yesterday or over the weekend.
I think that they're both viable, and they were so heavily talked about, and they were so rampantly run up. Now we're going to see who's got the moxie to weather the storm and who are worth it in the Bitcoin space.
Oh, and also to address John's question about the weakness in crypto being dependent upon energy, look at Ethereum 2.0. Look at that fork that they're doing, the merger that they're doing right now. That will drop, and miners are pissed about it right now, because what that's going to do is it's going to drop any reason to have a miner. It's going to, cut that middleman out. And it's also going to drop the energy usage significantly. I think
because the miners use a lot of energy. Miners use a lot of energy to mine Bitcoin. Yeah. And you're right. If this cuts the Maras, the riots out of the equation, you're right, they're going to be hot.
They already are. There's already stuff coming out. They're not happy about it. And I think I saw the estimates was 90% energy reduction from this new Ethereum 2.0.
Wow, that's huge.
Yeah. So Ethereum is more of that industrial network or industrial blockchain. Bitcoin seems to be that, designer name kind of thing. People are going to like it because it has the same backing as the US dollar. People believe in it. Whereas Ethereum actually has a lot of production or productivity usage that it can be used for. So, but one of the things with this most recent crash that I've definitely noticed is, they claim blockchain and crypto is decentralization. Well, from everything that I've been reading about, people being liquidated, and you have the Celsius liquidation going on, or Three Arrow Capital, 3AC, they just up and left and had billions of dollars under management and are just on the run right now. There's so much talk about decentralization, but this crash has shown me that there's a lot more centralization in the crypto space than what everybody was led to believe. And I think this is going to, this is that pushback, essentially, to push back towards a true decentralization rather than the centralized exchanges and all that we're seeing now.
Interesting. Somebody says the Fed coin is coming soon.
Yep.
There's still a lot of backing behind Bitcoin outside of all of the crappy projects that are out there. A lot of people are on board with Bitcoin. A lot of people are looking at Bitcoin, buying Bitcoin into funds. What's the word I'm looking for? Pension funds. All right. A lot of people are gambling on that. And look, talk about the Fed coin is coming soon. So I still think that cryptocurrency is a viable thing. I think that, something, I think that this is just a purge. Something, I'm going to put it, I'm thinking that right now what Bitcoin is going through is a purge, because if you look at a lot of the stuff that's in cryptocurrency, you go to coinmarketcap.com, there's so many cryptos that you can get into. I'm thinking that right now that this is just a purge to get rid of it. And the stuff that still stands may be the stuff that you wanna take a look at. What happens to EV with a major blackout? You don't go nowhere. I mean, Lee, that's how that goes down. If there's a blackout,
hopefully you live on a hill.
Well, no, you can still go. You got a generator. No. Yeah, you can do a generator, but that's using that dirty gas.
Strap a generator onto the back of an EV.
Strap a generator on the top of an EV. That's about it. But Lee, dang, you talk about what happens if there's a major blackout. You don't drive. Ta-da. All right. All right. Last thing. This is you. JP. We already did that. All right, that's all of the stories. We had a lot of great, strong conversation. All right, so let's go look at the stocks that we got. Let's go to the viewers. Let's start with your picks from last week, though. Patrick's picks.
So I didn't really get into a lot of my picks from last week, so...
All right, so I'm fine.
There needs to be an asterisk next to my picks from last week.
All right, then we won't look at them. Here's your picks from this week. So we already did the stories on all of these. Now you can just look at the stocks on this.
Yeah. So Chevron, BP come from the clean energy or the hydrogen energy story that we talked about. Also, HJEN is the hydrogen ETF that I could find. And we're going to talk more about those stocks tomorrow. So we'll cover them real quickly right now. But, Chevron, BP, big names. And the lot is riding on the change to hydrogen. Oil is yes, it's used in a lot of different products, a lot of different commercial aspects, but it's a depreciating asset over time. It, is slowly getting killed off. I thought 2016 was going to be, the nail in the coffin. It's come back a little bit right now, but still not to where it has been. And there's an even bigger, stronger push to move towards clean energy. And if hydrogen doesn't come out to be the winner, Chevron, BP could definitely be some of the biggest losers in the market as the oil demand starts to shift. So, not only, but the thing is about these, and we'll talk more about tomorrow, but they are relevant right now with the oil prices being the way they are. And also, from a longer term perspective, a lot of people are worried, should I be buying these big oil companies after they've been running so much over the last few years. If oil is going to go down, what am I going to do? The stock most likely will go down. Well, if they can successfully, and I say if with capital letters there, if they can successfully transition the oil markets to hydrogen markets, or at least for energy consumption aspects of it, then that could keep them viable and that could keep them going for the foreseeable future. TSM, talked about that. It is down right now. So as always, whenever you're looking for a stock to buy, you want to find a stock that, is undervalued, which a lot of these actually, except for JP Morgan, all of them are undervalued or fairly valued currently. You want to also look for a stock that's rising in price. Well, none of these are rising right now. Market's been, going down, and all of these have been getting hit with the overall market for different factors, but definitely ones to keep on your radar currently, and wait to look for an improving RT at very minimum there. Then recommendations: sell, hold, sell, hold. I like the candy cane look, so of course got to go with that one. Taking a quick look at the charts real fast. We'll go ahead, highlight them all. Oh yeah, you still don't have a layout for me. What?
Go look. Before you start flapping your jibs, go look.
I've already did it last week.
Oh, okay. Then you can.
Come on, Grandpa.
Wow.
All right. Take that off. Come on. So zooming out, 3 months.
That looks like crap.
Yeah, it's definitely been hit pretty hard. You saw that reverse. What is that? Shooting star?
Yeah.
Kind of.
Well, no, the wick is more than 2 times the body, so that is a shooting star.
So yeah, reversal sign there, coming back down. So obviously, these stocks have been going up. The oil stocks have been going up for quite some time. Therefore, right now may not be the best entry on them, especially after such a big run. You may want to wait for them to cool off a little bit more. But then at that point, look for that entry point. So these are keeping on your radar, not stocks to buy right at this specific moment. So just want to make sure we're clear on that one as well. But right now, pulling back, could potentially be hitting a double bottom. Keep an eye on that support down here at 145.80. See if it can hold that point. And then, if we get a short-term rally off of that point, that could be a decent entry opportunity for a short-term trade at least. TSM obviously been going down, obviously with China looking at, making some demands from Taiwan, also going through rolling lockdowns. There's been, and tech just in general has been getting hit hard. TSM's no different there, but at the same time, keep an eye on the RT, wait for some reversal signs to show itself. One positive that we do see, though, using the freehand line, price has been steadily moving lower over the last 2 to 3 months. MACD has been steadily picking up, so you do have a bullish divergence on that. Obviously, you need to see a breakout to really confirm that bullish divergence. But once again, keep on your radar right now. BP, similar situation. Oh, whoops. Forgot that I had that on there. Delete that. Zoom in. There we go. So BP had a reversal sign coming down. Need to see if it can hold this new low, or if it can bounce off of this low and move higher, or if it continues to break down below that point. But once again, same situation that we saw with Chevron. Wait, especially for a long-term entry. These oil stocks have been running up significantly. A short-term pullback that we've seen right now is not nearly the kind of pullback you're waiting for if you're looking for a long-term entry. So short-term, yeah, they are moving lower, but keep an eye on or keep them on your radar and wait for them to really hit some oversold territory that looks like a good entry for you for a longer-term prospect there. JP Morgan. It's real interesting. I've seen a lot of stories coming out over the last 24 to 48 hours. The banks are starting to fight each other now. And they're, coming out saying that guy, my competition is about to have some bad loans go belly up. that competition's about to have some bad loans going up, and they're all pointing their fingers. It's like that meme, the Batman or the Spider-Man meme, where they're all standing around pointing fingers at each other saying, you're the person, you're the person. Well, all of them seem to be having a little bit more issues than what they're leading on for, especially with after the last rate hike, I think it was, you had mortgage-backed securities hit no bid. And so basically meaning that nobody was willing to buy them. And just like in 2007, 2008, you have that initial no bid that happens, and it's like a car accident. The first thing that hits in a car accident is the car hitting the wall, and then you hit the inside of the car. So we saw that car hit the wall. Now we're waiting for that second hit to occur. That could potentially cause a lot of problems for the banks right now. Hopefully I'm wrong, but now they're starting to go after each other. It's getting a little weird in the banking space. So ones to keep on your radar, but at the same time, pay close attention to the headlines that are going on with these right now. And then last but not least, HJEN. So ETF on hydrogen, been in a steady decline just like everything else right now. You are potentially at a higher low right now being formed. We haven't really seen an uptick enough to really confirm that, but with the DPO steadily rising, MACD also steadily rising on a longer term basis, if this is a double bottom, these indicators create that bear or bullish divergence. I'd like to see it be able to maintain above that 30-day weighted moving average, and then use that as an entry point there. So any extra comments on any of these, Glenn?
No, they all look like crap, but I like the setups on them. I like the setups on them because mine are gonna look like crap too. So I'm just putting it out there ahead of time. I gotta answer
anything out there in the market that doesn't look like crap right now.
Okay, I'm gonna show it to you. I'm gonna show it to you.
Let's see it.
All right.
You show me a picture of Powell.
Listen, I'm gonna answer Tater's question because Tater asked, "Am I getting into oil or coal?" I own San Juan Basin. I'm in it currently. And you know something else? Because of you, Patrick, I picked up some HGen today. I picked up 350 shares of HGen today.
All right, I get 5% royalty on any gains you lock in.
Jack Bone Diddley. That's what you get.
You give me credit. I get 5% royalty.
I'm looking. I liked your story, and I think in next week I'm going to do a hydrogen story. I think I want to do a hydrogen story on YouTube. What do you think?
I mean, yeah. Just
yes or no. That's all I need. I don't need anything more than just freaking yes or no.
I thought lithium is your thing, man.
Well, this becomes another commodity, right? So I think I'm gonna stick with that whole commodity.
I hope everybody out there sees that I am the brains, and then Glenn is just
I wish I could freaking.
I'm like the U.S. You're like China.
Hold on. This is what we need to play. Hold on. Yeah, there we go. I played crickets because you can't hear it. I played crickets, but I'm thinking I'm going to do I like your story.
Why are we playing a little game of baseball right now? Who cares about cricket? We don't follow cricket in the U.S. Come on, man. Move on. Get into your stocks.
I'm using my soundboard today. All right. So let's go take a look at my stocks. Glenn's picks. Let's go see what my picks look like. Oh, I didn't pick last week, did I? I didn't. So I don't know what these picks are for. These are
I automatically win.
I guess you do. I'm not gonna say no because I think you do. All right, here's my picks. Listen, I got me a buy recommendation in my picks. Why? I think that this is a contra for the real estate. I think real estate is going to take a hit. So I got me a buy recommendation, jerky boy. So how about that?
That came from my picks from 2 weeks ago.
How did that? I just put that up there for this week.
Go look at my picks from 2 weeks ago right now.
I'm muting you. I'm so muting you. All right, KB Holmes.
I'm taking over.
No, you can't.
I got it. Look right there. Right there.
Whatever. All right, so that's the wrong one. Stop. All right, so KB, I think is going to be a bearish play where I think SRS, stop if I kick you. SRS is going to be a bullish play, even though it's down today. Oil, now people are still asking me, are you still playing oil? Yes. The story hasn't changed. Supplies are thin, demand is high. Until that changes, oil is still going to be a good place to have your money. Now, I know it's been pulled back. It's been pulled back. Why? Because it's made a lot of money. I made a lot of money on San Juan Basin, took my profits, made a few $1,000s on it. Now I'm back into it because, again, the story hasn't changed. The story still remains the same. I think oil is still a good place to have your money. It's down today. That's fine. But as the whole industry is down today. But I'm still a big fan of buying oil. No ifs, no ands, or buts about it. Palantir, we didn't do a story on it, but I still... What are you wiping your eyes for?
Dude, I mean... I could put GameStop on my list every single week, but you don't see me doing it. Come on.
Okay, you do what you want to do. I'm doing what I do.
You push Palantir left, right, and center, man. Look at the RT still.
I like the stock.
Bring people stocks that they can either put on the radar or make money with right now.
That's a stock to put on your radar. It's up today. That's a
for
stock
what? 2025, 2026?
Wait a minute. It's you wanted the people that know nothing about what Palantir does. You need to do your research. Do your DD.
We've talked about, you can only
do
talk
your
about
DD.
one thing so many times.
It's a good stock, just not the right time to buy. I like the stock. All right. So, and coin, looking at the whole crypto space, I like it. Find this coin in the software to use.
I wouldn't touch coin.
And listen, that again, I'm thinking that it's got a potential. It does have potential because it's been beaten so bad. I think it's got potential to run. I just don't know when. Right.
Oprah, it has better potential to go to zero. Look at that RT.
You're right.
And you have potential.
Wow. These are my picks. All right, SRS. Oh, look at that. So real estate has gotten beaten up. This is a contra for it. It's pulling back right now, but still above. Oh, let me put on a real layout. Let me go put this on as a swing, as a longer term. It's above the 20-day exponential moving average. No earnings on it because it's an ETF. Pulling back, that 20-day exponential moving average is serving as a good level of support as far as right now. DRV is also another good pick. I do agree with that. Now, KB Homes, interesting that it's pulling back. It's bouncing. Nice up day today. Not a big, but a pullback in earnings. Earnings is the engine that drives the stock's price higher. The earnings right now doesn't seem enough to really push the stock's price higher. That's because of the hurt that they're going through in the current economy right now. There's my oil play. Look at the rebound in it today. It gapped down, but look at that rebound in it today. I still think that oil is a good place to be. We'll see. There's my Palantir. It's got me to a level of resistance. Let's go see if we can break above. I like the volume on it. I hate the earnings per share. The company's still not making money.
Where's the big spike in volume on the last 3 days?
Oh, but it's
no buts about it.
What?
Come on, stuttering Steve. Where's the big volume?
It's above the average volume as opposed to where it has been back here. That's above. That's at or above, jerky boy. That's at or above. That means it's running up. Earnings per share, I still don't like.
Look at the candle associated with that big spike in volume.
Why are you trying to be a jerk? Why?
I'm just trying to help you, man.
No, I like the pick.
You've taken all my other ideas with the housing and all that. Why not take this idea?
All right. I still like Palantir. Coin, I'm with Patrick for the most part. I wouldn't want to touch coin. All I'm saying, it's got potential for the cryptocurrencies that last through this purge, and I think I really want to attribute that word to this, that this is a purge, that the cryptocurrency space could rebound and a little stronger with more viable plays in this space after they weed out the ones that are crap. All right, Joey, put us back on to. Wow, really, Joey? Joey is sitting there is like saying we were going too long today. Wow, really, Joey? Wow. I think you're saying that because Clay is here. Say hi, Clay.
Hi.
Clay is the head over this whole space for us. His name is Clay Royer, and he's here for our summit. But he's the main guy that does all of this stuff. So
Three dudes in a room.
He's in the room. There's 3 people in my office. Crap. It's a lot of people in here. Y'all sucking up all the air, and I got to feel all the heat. Sigh. All right. Patrick, a lot of good conversation today, bro.
What's that?
A lot of good conversation today.
I would concur, except for the Palantir stuff. And you taking all my ideas.
Whatever.
But besides that, yeah, great.
Whatever. I love that we can bring this to the table and not agree on everything. I think that's really kind of cool. And a lot of chat came in today as well. We're still having fun. Don't stop, don't stop. There you go. So a lot of great chat came in today. I know we didn't read all of it, all right? Because Patrick talks a lot. So we didn't read all of it. But thank you guys for being here today. Sit up all night playing Xbox. Most 15-year-olds does that, Glenn. I know. I don't play Xbox anymore. I play a game on my iPad, though. Thank you, Joey, Glenn, Patrick, Clay, Boston, and everyone else in Glenn's office.
Hey, I am not in Glenn's office.
Patrick's not in my office. Patrick is in the office right here, right, Patrick? He's right. Yeah, we're right next to each other. If you haven't already, just like Lee said, if you haven't already, hit the like button. Hit the like button. All right, and we're gonna be out of here. Anything else you got to say? I'm gonna take us out today, but anything else you got to say today, Patrick?
Don't forget, tomorrow, 11 a.m. Eastern, we do have our mobile coaching session where we're going to be talking about hydrogen related stocks. So if you're interested in that, want to get some ideas, make sure to join us at 11 a.m. tomorrow.
And I am going to take Patrick's piece there, and I'm going to do a 6 p.m. video next week on hydrogen. That one I'm gonna take that. I am gonna do it.
Did you ever see the movie Italian Job?
No.
With Marky Mark and all those people in it?
I haven't. Clay says he did.
So he seems like the what's the guy's name? I can't think of his name. He seems like the robber that ends up, they ask him, what are you going to do with the money? He says, I'll take one of what everybody else says. Can't come up with his own ideas, so he just takes everybody else's ideas. Wow. That is Glenn right now.
Wow. All right, fine. I'll own that.
If you haven't watched that movie, that is a great movie. You got to watch it.
The Italian Job?
Yeah, it's such a good movie.
All right. Don't forget, in a couple of days, we have the one-day summit. It's going to be, I will host it, and it's going to be awesome. It's going to cover, everybody here needs to do right now, just register for it. Go to www.vectorvest.com/summit to register, to go register for it. I saw your comments, Michael, on REI. Getting ready to be added to the Russell 3000. I'm going to take a look at that. Glenn, isn't REI oversold being oil and hedge around 95? I'm going to go take a look at it. Will the summit be recorded to watch later? Roger, it will be up over the weekend. So it will be live and it will be recorded for you to watch.
But it'll be limited time though, because then afterwards, if you want to watch it.
I know, we're going to talk about that during the summer. So
all right.
During the summit. But you want to get registered for it. www.vectorvest.com/summit. But I will let you know, Patrick was getting ready to say something, but we're going to hold off on that. It will be free for you for the weekend. All right, so if you can't watch it Friday, it will be up Friday, Saturday, and Sunday. You can go watch it. All right, Arnold, reach out to me, glennt@vectorvest.com, 2 N's, glennt@vectorvest.com. You need to email me, man. We got to hook up. All right, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bon dia, salam, shalom, namaste, yasu. Till next time, folks, see ya.